Hi, I'm Peter Rose, founder of Longwood Currency Trading. Why Forex trading is not intuitive. If you traded Forex for 15 minutes, I mean, seriously, you would have come into situations where you've said, boy, the NFP just was really just unbelievable, or oil prices did this, or, whatever. So the XYZ pair should go up. But it didn't go up. How many times have you been watching a price trending and popping off the 20-period moving average, and you've been able to do a flip on that? Except it's random. And sometimes it works and sometimes it doesn't work. But you would think, and that's the key to the non-intuitiveness. You would think that because the NFP came out a certain way, that represented da-da-da-da, and that was going to cause the interest rate to do this, which means that your intuitive view of the Forex market. Well, let me ask you this. Do you have a PhD in economics? Do you have a master's or a PhD in math? Have you done complicated simulations on a computer before? Have you worked with a group full of people that just focus on economic activity in the Forex or currency markets and build very complex Monte Carlo simulation models? No, you probably haven't. We're retail traders. We get up in the morning and have our coffee, and we trade for a couple hours, and then we go to work. Or if you're like me and you're retired, you get on with your day. Where's the intuitiveness? The ability to have this broad-based view of information that allows you to go, oh, that's number one. Number two is, well, if you had all of that information, would you be able to make that statement and say, oh, this has happened, and I've seen that happen in the past, and I know, blah, blah, and so I think price should do this. That's still not going to be valid because that's intuition. You're still saying, I think. I know in a lot of my videos, I've said, we don't think about things. We develop a probabilistic view of what might, could, should happen. But that's all it is. The term might be a guesstimate, but based on probabilistic analysis. But it's not intuitive. It's based on probabilistic analysis. And so Forex trading is not intuitive. Price action is not intuitive. And we can't bring our animal brains as humans to bear in an intuitive manner against a market that's not producing intuitive information that's going to trigger valid intuitive responses from you. If you're approaching trading from the standpoint that your experience and your widening knowledge of economic activity is going to enable you to trade more intuitively, you are doomed to fail, because you are, no matter how intuitive you are. Look, I came out of, I've been, 57 years now. I've been involved in the martial arts and doing stuff, training my body to be aware of what's going on around me. I sense people. I can sense when they're angry. I can sense, I have that intuitive feeling about people. And law enforcement, they have this intuitive feeling based on hand motions of the person or body language or whatever. And if you do something that they know intuitively that you are going to flip out, they're going to throw the wood at you, and they're going to take first strike. Those are intuitive things. You can use your knowledge and your training and say, oh, I think. and you could be right. It's still a probabilistic endeavor, but you're basing it on your experience. You don't have to have experience to trade Forex successfully if you understand order flow and that you accept the fact that it's not a market that can have intuitive concepts applied to it. It's non-intuitive. The market's non-intuitive and you are. And so how are you going to break that? When I work with someone in consulting or in my primary vehicle for education, this fast track program, what I'm trying to do without getting into the psychology of things, because as soon as you start talking to people about psychology, they turn you off. They don't want to hear it. But that intuitive nature is such a part of us that we have to discuss it. But nobody wants to listen to that. And so built into the Forex program as I go through, it's only 6 weeks. Boom. And if you connect the dots on that program, eliminate all the information that you think is important, because that's intuitive, and accept the fact that you only need to know about 5 things in order to trade currencies as far as doing the trading. And then you need a couple of rules to deal with the different phases of what I call the life cycle of a currency position: entry analysis, position management, and exit methodology. Now, you might not have a life cycle of a currency position. You may not have entry analysis or whatever you call it, but you still have to have rules to deal with that. You know, if you had you can know what to do and how to do it, but if you don't know when to do it, which is what the rule tells you, then you're screwed. I mean, the example I give in many of my videos and in the coursework that I provide is that if you're going to plant a garden, you have to understand what the tools are. Here's a shovel. This is what it is, and this is how I use it. And this is then I put the seeds in that hole, and then I water it, and that's how you make a garden. But if you try to do that in the wintertime, when there's snow on the ground, you're not going to be successful. So when you do the what and the how is more critical than the what and the how. I say all the time, and I mean no disrespect for those of you that don't have the background to convince yourself that there are 3 questions that you have to ask yourself in the solution of any problem: what, how, and when. And everybody thinks in currency trading that the when part is, as I've said many times, when the short MA crosses the long MA, or the price bounces off the upper wing of the Bollinger Band, and the RSI is over 78 or something, and that's not when. Those are systems. The systems are developed by the desire for us to be intuitive about our trading. Oh, the price is approaching this strong resistance level, and so my intuition, my experience tells me it's going to bounce off of that and it's going to go down. Well, it could go through. Well, where's the intuition there? Now, what are you going to do? But we get trapped into that. We draw all this shit on our charts and we rely on that to make our trading decisions instead of us learning how to trade, which is what I do in the fast track program. You have to learn how to trade. Now, you may have been trading for 2 or 3 years, but not really understand what the process is. Somebody who runs through a minefield and gets to the other side is a survivor, but that doesn't necessarily mean they know how to get through a minefield. They have no business to turn around and say to somebody else, hey, I got through this minefield, I know how to do that, so you should follow what I do. Unfortunately, that's the process of the education that's out there, and that's the process of my fast track program that counters that and tries to start at the beginning, building a foundation of information, rational, valid information, just a few pieces of valid information, in order for you to not rely on your intuition, but understand that correct decision-making is simply a matter of selecting the highest probability that you think something will do. Do you need a math degree to do probabilistic analysis and Brownian motion and all that shit? No, you don't. You need simple Boolean ability. I'm going to do it or I'm not going to do it. There's no analog in trading. You're either going to do it or you're not going to do it. Well, when this happened, no. That's an analog approach. And that's what complicates things, because you're saying when the RSI does this and the moving average is here and it's Tuesday, then those are all not probabilistic views. They're based on systems of information, pieces of information, the RSI, the blah, 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 blah. And I've said many times that builds you a permutation matrix of decision, a process. If I have two indicators that I'm looking at, or two things that I'm thinking about when I'm trying to correlate whether I'm going to bid ask, I have 4 different permutations that I can arrange that information in, those indicators in. Let's just call them indicators. I can have A by itself. I could have B by itself. I could have AB, or I could have BA. If I use 3 indicators, or 3 things that I'm thinking about, I have 15 different permutations. If I use 5 things, including the NFP and it's Tuesday and RSI, and I have 325 different permutations, I can put that information in. And that's why we're failing as traders. We think that the more information that we have, the better of a trader that we'll be. No, the more knowledgeable we'll be about all the stuff that's out there, but that doesn't make us a better trader. It doesn't cut to the chase of the thing and say, what do I need to do? What do I need to know in order to be able to implement the how when it's important to do that? And so that fast track program throws all of the information out and we start over again. 5 things you got to know. Each one has 3 or 4 subtopics to it. I've gone through this in other videos. I won't bore you about the whole process of what the fast track is doing, because you're not going to take fast track anyway. So I'm not trying to sell you anything. I'm trying to show you what a reasonable, logical, educational process is, such that you're trying to remove that animal brain intuitiveness and rely on the facts. And what are the facts, Peter? The facts are price action based on order flow. That's it. It has nothing to do with the NFP and the whatever. God. I was in trading the PCE the other day, and I slipped off. It was busy, and there hadn't been anything setting up, and I sat down again at the trading desk, and I looked at the economic news releases. Oh, shit, I got a PCE release in 14 minutes. Oh, I got all excited. I thought, well, I took a bad hit the other day. I was 3% down on risk. And I thought, okay, this PCE is going to come out. That's a major, major deal. I'm gonna float on both sides of that, and I'm not gonna put limit orders on there, because when you trade something like that, you don't put limit orders down or stops or anything. You have your finger on the button, because things move quickly. And so here we go. I got my finger on the button. 14 minutes, 10 minutes, 8, 7, 5 minutes, and the price is going up and up. And I'm going, people are convinced this is going to go up. I bet it's going to fade. I'll bet it's going to go down. And so I go on the downside. And I mean, it was just a rat's guess. I was just going to try to grab 5 pips and finish my coffee. It was a lark. And so price was, I don't know, 10 or 15 pips above where I was looking to go short. And boom, down the price goes. I hit the button, down short it goes. I'm like 2 or 3% up on my risk. I'm really happy. I'm getting ready to close out the trade, and in like by the time I'm looking at the thing and my animal intuitive brain is going, oh, I think this has probably gone far enough. Up it goes. I'm 2% down on my risk, negative, bang, and I go out. Oh, shit. 3% loss the day before and 2% loss again today. And that was the second to the last trading day of the month. And I just lost 5%, a little over 5% in 2 days. I got 1 day left to trade, and I made 0.1% against my risk on the plus side, but I still came out at the end of the month with 4% up for the month. But it's just doing stupid shit like that that gets you into trouble. So, you know, by doing a flyer to try to grab a quick 5 points by fading the PCE release, I dropped off from a 9.5% win for the month that I could have. If I had just kept drinking my coffee and quit thinking intuitively about what I thought was going to happen, I could have closed out the month about 9.5% against risk. And it happens a lot. It's so difficult to overcome that intuitive nature. And it's particularly difficult for me because I spent 40 years in real estate as a small real estate investor and retired a millionaire. So I must know what I'm doing trading real estate. And over that 40 years, you build into your DNA an intuitive, because real estate is very intuitive. Oh, you know, this looks like a good area, and the roof looks like it's going to hold up for another 8 years. And, you know, okay, that looks good. That's intuitive. That's experiential-based analysis of a real estate investment. Well, how do you take 40 years of doing that and your livelihood based on that and turn that around into a non-intuitive market? How do you do that? Well, I do it because of the rules that I have, but because I'm a human being and I'm particularly impacted by this 40 years of real estate, I do stupid shit sometimes. So I did stupid shit twice this month, and it cost me 5%. So, but if I didn't had got it right and been up at 9%, then I wouldn't have closed out at 4%. So trading is a balance. You just have to be very aware of, if you are a very intuitive person, you're going to have a very difficult time trading in the currency market unless you have some guidance from somebody who understands that it's not intuitive and why you are being intuitive, and there's a process that we can go about to fix that. Is it going to fix it 100% so it's never going to happen? No. I've been looking at the currency market since 2007. It's June of 2025. I've been looking at the markets a long time and trading them. I did them as academic exercise, as studies. I took courses and all this other kind of stuff, but I never really traded. I did it as an academic exercise. And then in 2017 or 18 or something like that, I thought I knew everything and put $45,000 at risk, and off we went from there. And I lost $40,000. And that's where I came to my life cycle of a currency position. And those 3 rules from my 33-year career as a software engineer, a business application software, designing really complex business applications, membership applications and credit access applications and management applications, back office accounting applications, that kind of stuff. Really complicated stuff. And I applied that to my errors in the currency market and developed the life cycle of a currency position with the 3 phases of entry analysis, position management, and exit methodology, which is what I teach in my course, the Fast Track course. Each one of those phases has 1 rule, and each rule has 2 to 4 sequential conditions in them. And all of that goes, when it's presented logically over that Fast Track course 6-week time frame, it minimizes that intuitive desire to trade because it maximizes your desire to follow the rules and ring the cash register. That's the only thing that takes predominance over that intuitive thing. You have to change the way that you think. My karate master, S.A. Brock, taught me that the only way that you can become who you'd like to become is to alter the way that you think, because you're a product of the way that you think, and thoughts are things. And so by altering the way that we think about our ability at what works, the more likely we are to do what works and override that intuitiveness. If I'm a carpenter and I'm pounding a nail, if I get my thumb in the way, it's going to hurt. Well, rather than be hurt, I want to be successful at pounding the nail. I'm not concentrating on not hitting my thumb. I'm concentrating on the methodology of correctly hitting the nail, which implies not putting your thumb in the way. And that's how I teach currency trading. Don't put your thumb in the way, because currency trading is not intuitive. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.